Practical accounting. Number 13. Recording of other operating costs. When we buy product and services to run the business, it gives rise to other expenses called cost of operating costs. The double entry bookkeeping for these follows the same process as before. But first, a quick reminder of the principles of double entry bookkeeping. There is always 2 entries of every transaction. Product and cash move in and out. The key is to follow the cash. Why? Because cash is blood to every business. Debit is in, recorded as DR, and credit is out, recorded as CR. The accountant will call a supplier a creditor. Okay, moving right along. For example, if we buy stationery. We are buying stationery to use in the operations of the business. The recording of this transaction will be as follows. Buy. Stationery moves out from the stationery supplier and into the stationery account. Pay. Cash moves out from the cash book and into the stationery supplier account. This transaction is now complete. Product has come in and cash has gone out. Another powerful business tip from learnaccountingfast.com. Next, we will look at buying the stationery in a credit buying cycle.